There's something happening with the Japanese yen right now that we need to talk about, and it really sets up an interesting turn of the year for 2025. Let's jump in. Hey traders, welcome back to another video. I just opened up with a bit of a cliffhanger there. The dollar yen is a chart that is hot on my watch list right now because I found something in the commitment of traders data that we need to address. So just a quick recap for those who don't know what the COT data is. The CFTC puts out a weekly report that shows institutional buys and sells in the futures market. And I've selected the Japanese yen futures contract to isolate this so that we can take a look at this very interesting trend that I've noticed. If we zoom in over here to the last three reports, check this out. There's been something very interesting that I think we need to talk about. So if we take a look at December 3rd, December 6th, and December 13th, the latest commitment of traders data report, we see an interesting pattern. Under the change in long contracts, you can see that every single week there has been a massive increase in long positions. And at the same time, in that same window, there's been significant closing of short positions. And if that's confusing, just think about this for a second. If they're adding a bunch of long positions and closing a bunch of short positions, does that tell you they're bullish or bearish on the Japanese yen? It tells you that institutional money is bullish on the Japanese yen. And we can also see that with this yellow long percentage chart, which has steadily been rising in recent weeks. So long story short, it seems like there's some accumulation going on of Japanese yen long positions according to the CFTC's commitment of traders data showing institutional money is buying the yen. Now, the reason this is so interesting and perhaps a little bit alarming is that the last time this happened, it preceded a major drop in the NASDAQ, as well as a significant strengthening of the Japanese yen itself. So let's just map this out really quick. If we take a look at when Japanese yen accumulation was happening last time, it was happening in July and early August of this year, and then persisted through September. Let's go take a look at what happened in the dollar yen following that period. So again, if we take a look around the July period of time, you can see what was going on. There was significant buying of the Japanese yen. Now, you might say, well, if they're buying it, why is the chart going down? Just remember, for currency beginners, when somebody is buying the Japanese yen against the dollar, that means they're selling dollar, buying Japanese yen. So buying of the Japanese yen actually causes this chart to go down. So we see a significant accumulation of Japanese yen long positions as this chart just trended down and down and down, and they actually even added to their long position, making some really huge returns very quickly on this currency pair. And by the way, at the same time, this was a ginormous drop for the NASDAQ of almost 17% very, very quickly at the same window of time. Now, what I should clarify is this does not necessarily mean that starting today, the Japanese yen is going to be an instant, boom, and everything else is going to collapse. But it is worth mentioning that this accumulation, as it started, it actually accelerated and got even more intense. So perhaps there's something that institutional money is seeing and perhaps getting a little bit cautious. Typically speaking, when people are out there buying the Japanese yen aggressively, it means they're a little concerned about the global economy and rushing to safety, which the Japanese yen is a very low interest rate yielding currency that many investors sell short or borrow in order to buy foreign bonds, foreign stocks, foreign currencies, etc. So the unwind or the reversal of that trend was very violent back in August of this year, and I do find it very interesting, perhaps a little bit alarming, that it's back on the rise. By the way, the software tool that I'm using here is the Edge Finder Pro, and if you don't already have a copy of the Edge Finder, you can pick it up down below in the description, or you can apply for a trial using the link in the description as well. If you use that link, just a heads up, we do charge a small fee for trials. However, they are currently half off right now. So take advantage, apply for a trial down below in the description if you'd like to check out our software, which helps you track institutional money play by play, week by week. The NASDAQ and S&P 500 are slightly lower today, but really not anything substantial, just a little bit of a breather from yesterday's ginormous up move. Meanwhile, gold and silver are seeing a little bit of downside continuation here. Really can't seem to catch a break. Gold has been really struggling to break out of this range and just chopping back and forth for the most part. And by the way, you can also check on this COT report stuff. You can check everything from gold, Bitcoin, Dow Jones, euros, pounds. You can do a little bit of everything all within our COT data history page, or the latest up-to-date COT data history. COT data, net positioning, and weekly filing. We have all the different tools available to our customers here. The VIX is also perking up a little bit here ahead of the Wednesday's Fed meeting, which definitely could cause some volatility in markets. We'll have to see what Jerome Powell gives us in terms of expectations for rate cuts next year. This morning in the US, we did get retail sales, which came in higher than expected on the headline number. However, core retail sales actually came in lower than expectations. And core retail sales removes automobiles from the equation, so it seems like there was an uptick in auto sales. Taking a look at the dollar index, you can see this thing is still in what I would say a pretty strong overall upward trend. Although it's been kind of quiet recently, not any major volatility, perhaps the market is just kind of waiting to hear what Jerome Powell has to say and what comes next from the Fed. But if you get something that more hawkish, which I kind of lean towards, I think that the Fed is going to point towards rising inflation as a cause for concern. I think that's why the dollar index is up the last few weeks. Or last week or two. If we get a breakout through the highs, I think from a technical perspective, that looks like a continuation play for the dollar index. But conversely, I would say that idea gets scrapped or becomes bearish if you actually break the 106 level. But I lean more towards the bullish side. I'm looking for breaks through the highs here for continuation plays in the dollar. Bitcoin tested a new high today, hitting 108,000, which is insane. So just really remarkable risk on rally going on here today, but pulling back alongside the NASDAQ and S&P today. Oil prices are also down about 2%, which is pretty interesting. Copper's also down here, and I think a lot of this stems from the concern with the Chinese economy really looking like it is struggling. This chart I showed yesterday got a lot of attention. So this is the Chinese government bond 10-year yield, and this, of course, is plummeting as people are favoring bonds right now, and that is why the yield is falling there. When I look at this chart, I do also wonder if this will potentially cause a little bit of a fear event. Could it possibly be that this fall off a cliff in Chinese data, could that also be tied in with the yen stuff, right? Some global economic concerns perhaps could strengthen the Japanese yen. Maybe that is what the COT report showing us institutional accumulation is all about. Just a guess though, it could be a whole number of reasons as to why Japanese yen is getting accumulated right now, but just wanted to throw that out there. If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, 8cap. 8cap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your 8cap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out 8cap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.